All right, let's have a look at this, right? So I want to have a look at a few different aspects like long-term holds, long-term buys, and sells and shorts, and sort of see where we're looking at. So basically on the daily, we are obviously in a huge downtrend and we're surfing this 10 EMA, right? So it's actually the EMA is pushing price down and it's holding price under. Now, we do have our key levels and key zones locked in here at that key all-time highs, the old all-time highs, and we're already starting to, show a little bit of support out of here, the push-ups, the fast reactions out. But as you can see, price is still digging deep into here. So I reckon we'll consolidate here for a little bit. Now let's look at how long we consolidated here for. So we pretty much consolidated in this area for 222 days. So this tells me that this should be an area of value that is should hold, right? And we should consolidate somewhere around here. And I think we were speaking about it last night, where if we don't form structures like this and we just have big, fast moves like this, look what happens on the other side. We just bleed fast because there's not much structure holding it up. But if we have structure like this, okay, this says like when we come back into this area, price should hold here and then hopefully we bounce out and hopefully this is the floor price. But we have had a pretty huge pullback. Now, if we have a look at even higher time frames, say the weekly time frame, right? We're so far away from these EMAs, it's not funny. Okay, so we're 23% away from the weekly average. And if we're coming into a higher time frame area of value where an actual big move has happened, 83% move, you can see how we've got the wicks here already, right? So we should have a bounce here because I don't think this will go too much further than here because our averages are so far away from from the EMAs. Does that make sense? Drop a comment in there if that makes sense to you guys. Obviously, markets can do what they want, but over like long periods of data and stuff like that, things happen the same over and over and over again. Okay. So I'm thinking like this will be the floor. Now, if we go up to a higher time frame again, say the monthlies, right? Sorry, let's just mention one more thing here on the weekly time frame. We are undervalued. So if we are undervalued at a higher time frame, like specifically like this, then people are saying this asset is cheap on this time frame, and long-term buyers will start to look at buying in here, okay? Because this asset's cheap. It's like you go on a house, right? You go on a block, average price is $1 million. You buy the house for 800 grand. It's under that $1 million by 20%. You want to buy it, right? Because you're going to be making your uplift there. So this is where people would start looking at buying Bitcoin for long term. Now, if you're day trading this or like just trading it, obviously market structure is king. Okay, just keep trading down into sort of these zones. I would be getting very cautious around here. Okay. So I wouldn't be looking at shorting from like here to here. These are really nice areas because we're at a resistance level now. We're in a downtrend. We've had a big wick to the top side. This could be a higher probability trade to trade back down into here. But if you've missed this move, right, there's nothing right in this vicinity now to tell me to take longs. There's only one other way to do things is take shorts, right? So we're in a downtrend, bearish market structure. Now, the only thing is like, what are we trading into? All this down here. Then it's our job as traders, and everyone's going to be different on this. And you'll just go to yourself, is this worth the trade for me? And this is where your risk management comes into play. All right. So on that higher time frame, all this is going to be a cautionary area for sure, and we just got to play market structure. But you can see here, it's slowly, it's just like just floating and flailing around. But we are under resistance. We've had a nice big wick, and yeah, this could be a nice area to just play from here to here. If we do get a difference, could break up above here and then trade up into that zone here. So you always sort of want to have like those two options, but just looking at that, okay? Let's jump onto the monthly time frame. Our monthly EMAs are still bullish. They haven't crossed. Obviously, this is a really, really high time frame. Okay, this is going to take ages to develop. So what happens? Markets expand, right? Markets expand and then they contract. Okay. Our EMAs flare out. And then when markets go sideways, we start to flatten out like this, right? What are our EMAs doing now? Starting to flatten out on the monthly time frame. Then we pair that with down here on our CCI oscillator, it's saying that we are now undervalued. We're at a pretty key resistance support level here, right? We're at that all-time high levels as well on the monthly. So this could be a good area to like DCA into and buy for that long term. But obviously we want to look at like that structure. So but also like another trading strategy. So, there's thousands of trading strategies. You guys will get access on the 6 week when I show you guys more strategies, right? See how this EMA down, oh, sorry, the CCI down here is undervalued. And then basically all the way up to here, we're overvalued. So a strategy can consist of anything. It just needs to be disciplined and repeated. Now, for long-term buys, you could go, all right, I'm going to buy into this asset on the monthly time frame and just hold until it reaches the all-time highs of the overvalued, right? So there's something you guys can look at as well. If you're like looking to dollar cost average into any asset, right? You identify an area of value and then you pair that with your CCI. I think I ran this strategy. I back tested the strategy over like on a daily time frame, and it was pretty highly consistent of just like buying and holding. So like buying on the CCI at undervalued and then holding until the overvalued hit. And then obviously if you want to take into market structure, continuation patterns and things like that, because if you're in a trending market, your CCIs are going to basically show you that you're oversold and stuff like this. So, you know, you could use this to get in, right? But then you see this big continuation pattern. You're like, man, we're overvalued here, but that's okay because we're on an all-time high support. We've got a nice continuation pattern. EMAs are pushing out. I'm gonna stay in here, and then you can start looking and waiting for these bearish engulfings and things like that to actually exit. So you can pair things with other things and go from there. So that's obviously going to dictate the whole market as well. So you can go and look at key assets. I don't really like trading anything like meme coinsy or anything like that because as soon as Bitcoin sneezes and drops, where do you think the money's going to go out of first? Meme coins. And as fun as it is, you might have like a little gambler's bag to like put into meme coins and stuff like that, but I wouldn't put too much attention into it because at the end of the day, like crypto, for example, is right in its infancies. Okay. So if you think about this, if we were back in the day of the ASX and we could see right into the future to now to go, all right, prices are here, but if we were back in the day and we could go, all right, the top 20 in ASX, if you put just money into that and just held, right? Where would you be in life? So right now, like we've got that knowledge and we've got that insights into crypto. It's like the fucking top 20. Why would we want to invest in meme coins when they could just potentially be shit? Right? Like we've got a solidified top 20, top 30, top 40, top 50 that have got use cases that are doing good things in the world. Why would you want to buy shitty meme coins when if you've got like a 5, 10 year, 15-year game plan and we're so infant in the markets? Because none of us had that opportunity in the ASX to get into the infancy of the markets, right? But we've got the opportunity in crypto to do that to, you know, prosper. I was like, I just don't look at it like why buy meme coins. So Ethereum, let's just jump on that daily time frame. Let's draw out some key levels here. Got a nice key level here. We had some big movement here. 143%. So we're at a nice level. A little bit too soon to be like dollar cost averaging in and stuff like that because we do have that bearish market structure. We could start looking, at these sort of levels down here, 1400s. And then fuck if we can get sub 1000, holy shit, that'll be good because that'll come all the way over to our all-time highs over here. 300% from there. That's crazy. Hey, just by understanding market structure, could have saved 70% on your portfolio, but a 300% gain from like just these key levels. So even if you missed slightly, you're still 70% better than most people that bought up the top. We've dropped 70%, you know. Let's go and have a look. Yeah, so we've still got that bearish market structure on the 4 hour. Like we've got a lot of momentum in the downtrend still. So I wouldn't be looking at like buying long-term sort of stuff yet. My goals would be looking at like that 1600 area because even if you start picking up Ethereum at the 2300 mark again, right? At least you've got confirmation, if that makes sense. You might not get the actual bottom. So on that daily time frame, we're literally looking for. Let me get my fancy little pen out. All right, we've got that downtrend, all right, and then we just got sideways action on that daily time frame. Pretty much everything that I'm showing you in the gold sector is doing this. We got the downtrend, we got the sideways, and then we got a powerful breakout. All right. That's like that sticks out like fucking dog's balls. We want to see like a powerful breakout. We got the indecision and then that retest, and then we start to see that market structure shift. So that's all I'm looking for. On a reversal, that's what I look for. If you saw this in this area, perfect. Or like a sideways action, a breakdown, right? Because institutes will basically be going, all these people are taking longs, right? The institutions will come in, wipe out everyone's stop losses, come back up, reclaim this range, and then back out like that. So if you ever see that, that's such a powerful move. I think I've done a video in educational on demand support as well around range reclaims. So go and watch that because that's like higher time frame stuff, but even lower time frame stuff, it works really well. But it's basically the break of support, resistance now didn't hold back. Now this is support and then continues out, right? So it's basic market structure, but I just wanted to show you the psychology behind it. So there's a few things to be watching out for. And guys, like it sticks out, right? Like you look at it and you're like, yeah, that's it. It's like the black dot, the one black dot in 100 white dots. You just notice it. We are coming into those cautionary areas though. So see this, how like we've got this range, then we drop below. If we broke up above, that's what I was just showing you then. All right. Sideways, sideways, breakout, up. So this is what I was talking about last night on the hangout. Like in say sideways markets or downtrends, right? You can have the most perfect setup, right, on one of the altcoins, and then Bitcoin just does its thing, right? And then it's gonna set like it'll just destroy your setup. So what I personally do, like I won't trade any altcoins. I barely trade altcoins at the moment. But when there is a bull run, I'm buying spot Like I'm just buying the asset. So if it moves 10%, I'll make 10%, right? I'll buy altcoins because they move a lot faster than Bitcoin. This is what I do with the commodities as well, right? Like I leverage trade silver, right? I leverage trade silver and gold, but the gold stocks and the silver stocks move a lot faster than gold and silver itself. So I buy my stocks and hold, and then I'm getting 50, 60, 70, 80, 300, 400, 500% on my money on them. But obviously, when silver and gold shit the bed the other day, they all come back 20, 30%, but they all still held market structure, right? So you got to be just understanding of that. And that's why I love using like, say, example, like ETFs, right? Because they'll move slow, but then you go into the baskets of them in the stock market, and then you start to go, all right, well, which ones are moving in that ETF? And it's the same thing with that. It's like silver, I go into the stocks, and then I'm like, which ones are bullish in there? And then I buy, and then they just fucking run. So like the other day, I think I dropped CTM in the community yesterday and today, right? Hit support up 15% today. So this is like, and gold and silver are just hovering at the moment. They're not doing really too much because they've just had a shock in the market. But all these gold and silver stocks are like holding strong. And that's what I mentioned to you guys a couple of weeks back. I said it could be volatile in the market, right? But identify stocks that are holding strong, because then when silver and gold stabilize, these things will take off. And it's the same shit in crypto, right? So like when we get into a bull run, like we'll fucking destroy it, because you guys now like are all sort of like the new group. But when that cycle of crypto comes in, you guys will start to see these cycles happening and happening. So it's not like you might miss out on this one, but you're starting to understand and see, and then you'll start to see the exact replica of shit that we're looking for and I'm looking for, and then you'll be like fucking bang, bang, bang. So it's like I always talk about, trading is our Olympics. You might go through a few seasons of training, no one knows who you are. But then the Olympics comes, and then that's when you get your fucking gold medals, right? Those athletes don't get nothing for years. No spotlight, no nothing. And then soon as they're on that world stage, then that's when they get the spotlight. So that's what you got to think about, right? It's like, cool, you might be missing a lot of stuff now. I try to put a lot of stuff on the silver plate for you guys, but you still might not be confident enough to take the trades, or your knowledge might not be confident enough to go, yeah, I want to buy that or whatever it may be. But then you will see the shit that's happening now, and markets do the same stuff over and over again. They do. They'll do the same thing over and over again. If you don't see what you want to see, stay out. And then you'll actually get excited when you look at a chart and you'll be like, who wants to go to the casino when you can just put money in here and know high probabilities that this is going to move? Cool. All right. Where are we at? Let's jump into the euro monthly chart. Are we on daily charts looking, pretty good. We've had a bit of a pullback. This could be good for the bot. So what I love about markets, there's always perception. Okay. So I'm going to ask you guys here. So we've got a push up. Then we've got a pattern. Right? What is that pattern?
Bull flag.
Yeah. So a continuation pattern, right? Now we look at this. This is why I love markets. Oops. So what's that? Down and sideways.
Consolidation.
But also,
Bear flag.
yeah, bear flag, right? So you got a bullish continuation pattern, then you've got a bearish continuation pattern. And this is why we need to do multi-time frame analysis, right, to get the best picture. Now, Either one is right to trade, but there's only going to be one outcome. So this is where our psychology happens and it goes, all right, if I lose this, I suck, right? If I win it, I win. But the market is all about perception. It's our job as traders and educated traders to go, what is the highest probability trade? Because there's millions and millions of people out there, and all it is just human behavior, right? So we want to find the highest probability trade. Doesn't matter if we win or lose, but we just want to find the highest probability. Now, if that confuses you, like you probably wouldn't have seen that, but I've just pointed that out, and then you're like, oh, there's a continuation pattern, and then there's a bearish continuation pattern. All right. But now you can see it like dog balls. But if you go to sort of like that daily time frame, you're like, cool, that looks like a bit of a pullback. And now we've got a different interpretation of the markets. Can you see how, with the information we've got, has shifted our perception of the market now? Pretty cool, hey?
So what's the correct answer?
There is none. So then this is why we do our top-down analysis and go, my higher time frame is bullish. Okay. 4 hour time frame says that we are still
All right.
above this structure here. So you can see that now, right? Now this changes your perception a little bit more because we're like, all right, cool. We've pushed up, retest, and now we've retested support level. We've retested this range and now we're pushing back out. All right. So now we've had a little bit more piece of information and a piece to the puzzle. And now it's giving us a little bit more clearer direction. So then this is where you start to go down to the 1 hour time frame to get a little bit more specific and go, all right, we're at a resistance level here. So my goal is to identify an area of value to take a trade from. What makes the most sense? So two trades make sense here. One is try and take an entry out of here because this is our area of value, right? Because we're looking for longs. We've determined that on the higher time frame. Or we can wait for it to break above here to then, potentially take the trade to here. Because then this will go, all right, we've now got bullish market structure again. But for now, we've broken out of this range and it's not a good trade because what are we trading into?
Resistance.
Resistance. So depending again, if you're on a 15-minute or a 5-minute time frame, if you're lucky, you could catch this and trade that range. But this would be like a small time frame thing because I think if the 1 hour pushed out, your risk to reward might not be as good. So you might have to catch like a 5-minute flag above here. Does that make sense? So there's sometimes where there's just no trade. Like, yes, we've got a bullish sequence and things like that, but then it's like, well, we're not in an area of value. So we're just going to sit out. Sometimes the market's just jumbly, and if it doesn't look clean, just have patience. What are my thoughts of support being at the bottom of the candles? Is that what you're asking, Ryan?
Yeah, so when I set this up this afternoon, I had my support pulled up higher in the 1 hour. Yeah, so see the
There.
candles there.
Yeah.
Yeah, that's right. At the bottom of them verse where you've got it right down on the wick. Yeah.
Yeah. So that's perfect. So you've got this resistance and this support here, but
Yeah.
this was the main range. See how we've had this big drop and then we've gone sideways here for a bit and then we've had that break.
Mm.
So this obviously respected here, the top of this range.
Yeah, we still came down and tested it.
Yeah. So if we pull this back here, there was no range here formed yet. So this was basically our main support level it would potentially come back down to. You know what I mean?
Yep.
But now we've got more information. This is where it's respecting. So this could definitely be the bottom, but like our ultimate bottom would be like right here. So if you try to take a trade out of here, right, it could definitely work. But now if you'd go into a bit bigger vision, right? What are we in the middle of?
Yeah, it's just in the middle.
Of a
But
range,
even,
right?
yeah, but
So
even when I brought that back out to a 4 hour, it was still there at that level.
yep,
So I thought that was pretty solid overall.
for sure, for sure. Um, like a conservative approach would be,
Maybe take it
putting,
down.
yeah, if you took a trade out of here, like you've got a fast reaction, you'd pretty much go on a profit straight away in here
Yeah, yeah.
because you see how fast it is.
Mm,
And then yeah, we could always tap back into here, but this could be the bottom here because it does show that we are respecting for sure.
mm.
Like
Thanks.
it's not a trade that I would look to take because now we're right at that resistance level as well.
Yeah,
So
that's right.
is that really worth it?
No, I stayed out, but that's why I just marked it up. Yeah,
Yeah,
until we see what it does.
exactly. Yeah. So that's where I sort of look for those little bit longer trades for a little bit more meat. So this is where if I was to look for if we didn't come back down into this area and we continued out like this was the floor now, then I'd be looking at an entry above here to take up into here. Solid close above here, sideways drift, EMA's pushing out, take the long. What's going on with the US 500? Man, she's just holding up, isn't she? Just doesn't want to fucking die. Oh, that's our resistance. We've got a lot of divergence through here. 1, 2, 3 points. If we break this level solidly, like a solid candle. So I think that was our daily range and it tapped back in. So it obviously, see how we're starting to curve around. Markets won't drop right back down. So we'll go sideways a little bit and then we'll need to make that decision. From here, this is just a mess up in here right now. So there's no trading decision at all on the US 500 for me. We're right at the top of a range. So like this is why we have risk management, right? You could take a really good trade out of that if you could try and catch up in here somewhere. Obviously, we're counter trend trading, right? But also you can see evidence here that we've been rejected so many times. So resistance is resistance until it isn't. Depending on your risk appetite and risk tolerance, yeah, this could be a really nice short. Yeah, EMAs are just blistering. So like it goes against my trade plan because weeklies are bullish, dailies are bullish. Like everything's just bullish on here, but we can see that we're starting to lose momentum. Okay, so just because I've got a feeling that US 500 should be dropping, like we still need to take stats and data and facts on the thingo, right? So weekly's bullish, daily's bullish, everything's bullish here. We're still at resistance, but for me, yeah, it's starting like on the 4 hour, a big wick down to the bottom here, showing that buyers are in this area, pushing it out. We've got a nice big V bottom here, so it's showing that there's still strength here, but on that higher time frame, we're slowing down. That's for sure. Okay, this might not be the top. We might push out a little bit more, but I'll just be very fucking cautionary on it. Makes sense. And then you see like right here, right, like sometimes there's not a trade, like I'm looking at it, everything's bullish in my eyes, but for me, I'm not comfortable taking that trade. No one's got a gun to my head to take that trade. I've got hundreds of other assets to look at if I want. That's it. Let the market decide which way it wants to go and then jump on for the ride after confirmation. Boom. We don't need to put any mental fatigue into it. GBP USD. All right. Looking pretty strong at the moment. I think everything's like just dominating the US at the moment, anyways.
Interesting, the bot's put on a sell for GBP USD at the moment.
Yeah, because it's bearish on the 4 hour. So this is where understanding the bot a little bit, because we've had a big move here, right? Now we're going to go into a sideways action. This is where like I would pause the bot on this because we're sideways and you're just going to be trap liquidity.
Fair enough.
Yeah.
Yeah.
Because you'll get you'll get like these crosses, and what will happen through here, your EMAs will cross bullish and bearish. All right, and then you'll just get whipped. But what will happen is it'll place them. Like you might be able to get a few trades in this range, but when I start to see um, EMAs going sideways, I'll just pause the bot on it. We know the bot is a breakout bot, right? So it loves breakouts and it will just keep doing the same thing over and over again. So once that breaks out, then it's like, bang, let's jump on. So for example, let's look at AUD USD. This would have been this would be really good for the bot right now, you know? Because we broke out here, we would have picked up a trade on this. Nice. Nice market. Breakout, trade, breakout. So yeah, we're gaining on the US dollar, which is good. I'm hoping we get to like 1-to-1. But yeah, she's looking good. Like I'll just be looking for longs on this, continuation patterns, breakouts. Did anyone catch that long from down here when I posted in the community about it? Yeah,
I caught part of it. Yeah.
good job.
Can't remember, man.
But this is all we're looking for, right? Big moves. Markets do the same shit. Keep telling you. Push up, sideways, push up, sideways. Markets got to breathe. We expand, then we contract. We expand, then we contract. When we're in a contraction, we just identify support and resistance on a 4 hour or a 1 hour, and then we try and get the lowest entry to take the next leg out. If it breaks down, we hit our stop loss. We wait for the wicks to the top side. We short back down to the next level if you want to do that. That's literally all I look for. Markets expand, they contract. They're going sideways, identify support and resistance on the time frame that it looks clean, right? So if you're confused with all this jumbly shit in the center here, zoom out, go to a 4 hour, go to a 6 hour, go to an 8 hour, and then identify clean levels. Zone them, wait till price comes in there because it'll play ping pong, buy in, sell out, whatever.
Is it safer to buy or do shorts and longs on 4 hour time frame? Because I'm finding I'm losing a bit on the 1 hour. That 4 hour, it seems a bit more conservative. I seem to, I don't win as much, but I seem to win more.
It's cleaner. Like if you do your back testing and you actually log trades, you'll go, all right, I'll do 200 trades on a 1 hour time frame and 200 trades on a 4 hour time frame. No variables, just the time frame, and you'll see which one's more profitable for you. And then you stick with that because obviously we want to make money. So you don't want to stick with the less profitable side of things because this also comes down to your psychology, your time of day as well. Like I love trading off a 4 hour time frame. It's just fucking clean. Really nice and clean. But what I do is I will zone a 4 hour zone and then I'll trade off a 1 hour time frame out of there so I can get it like a more of a precise entry. Yeah, you'll find that if you like the 4 hour time frame, like things will take a little bit longer as well to play out and stuff. So this is where you can start to go, all right, 4 hour levels, trade from 4 hour level to 4 hour level. So if you break if the trade is a bullish trade, you're taking a long, right? You trade from a 4 hour level to the next 4 hour level. Just play around with the settings because obviously we've got if you're just using the normal settings that we've put in there, that
one
will be
hour.
like you for your 1 hour and stuff like that. So just play around with the settings and then do the back testing on MT5, the automatic back testing. AUD JPY, this will be our one of the last. Oh, we still got to go through gold and silver. Let's have a look at these two. Come on, break this. So we had a bit of a shock to the system the other day, right? Like a bit of a, a fucking one sec.
Freak of nature.
Yeah, we had a fairly big drop. Now, because our EMAs are still bullish, I'm happy. Now, think about it like this. If you were to buy silver, like hold silver and stuff like that, um, we just pretty much retested here, right? Our EMAs are still bullish. What is price under the EMAs when they're still bullish? What's this telling us?
It's going up. It's pushing.
Prices if oh sorry, gold here. If gold is $4,975 on average, but we could pick it up at $4,400, that's telling me that I'm buying gold under the average value on the daily time frame. So same thing, you look at a house, right? On the street, it's $1 million. All the houses are $1 million, but one house is going for $800,000. You'd be silly not to be buying it, right? So it's the same thing. It's the same concept. So this is where I started to look for, those like last night I was trading live with a few of the guys on, we jumped on, hung out. Um, and I think we'll pop this because we're still in an uptrend. We just had this shock in the system. I think we'll run it. All right, we do got to break that. So if you're a little bit more conservative, I'm a little bit aggressive on these trades at the moment. I think if we clear this, we're going to run pretty quickly to here. Into that area. Because there's nothing here. We just got to break this level. See how this was like a little consolidation phase? So we're just getting stuck under here at the moment. So that could be a nice trade. Let's go and have a look at. Looks like we're starting to break out and push out on here. Like we're starting to dig into here. So hopefully we can, hold above here to push out. We could even look at, somewhere down here, a bit more conservative, but that's a decent trade. We push out.
Would you just be waiting for it to break that around 5,090 to make sure it's not going to come back down and test the 47?
Two things could happen here. Like this could fucking run like pretty quickly and you might miss it.
Yeah, I'm nervous for that 47 if it comes down. That's what I'm waiting for.
Yeah, yeah. So this is where it's like your risk tolerance, right?
Yep.
I'm pretty aggressive on this one at the moment. So you could go like a 1 hour candle break
Mm. That's what I'm waiting for, or trying to
and
wait.
then drop down to say a 15-minute or a 5-minute time frame to watch for a continuation pattern above there and then look for that.
Mm.
But obviously, like our 1 hours are pushing out pretty nicely.
Yep.
4 hours are pushing up past it. Your dailies, we're above. EMAs are so like bullish. We're so close to the 10 hour to the 10-day EMA. There's all the signs there to take a long trade. If it doesn't work out, that's fine. But there's no evidence to say take a short right now.
Mm.
And that's what you want to do. You want to look at the higher probability trade. The only thing you can look at is, like that. Once again, market perception. Down, bear flag, drop back down. Right? That's on the smaller time frames. But when you look at, the daily time frame, the weekly time frame, everything's bullish. So I'd rather take the higher probability trade on that. Silver daily has pushed down, crossed bearish.
It's right on a key level, this one now.
Yeah. So the trades that I've got on now, if we just get to back to all-time high, that'll be 16,000 US. That'll be a nice little trade. And that's on that account that I've taken from 400 to 3,500. So
No. Yeah, it's just on the mark. I've got it at 83.3 or 83.4. It's just testing it, and hopefully you can use it as support.
yeah. We've had some pretty harsh sell-offs in silver. So even if we get back like this would be the zone I'd be looking at. We could push out up into here and then come back down. So, like I've got trades on at the moment. However, if we push hard into here, then I would be just seeing how price reacts. Weekly. Yeah, weekly is nice. Like, look how far away we were from the pushed out. And this is just, going a little bit off topic, right? If you started to look at just those 2 points there, like buying undervalued on the weekly and selling, there's 22% undervalued, 30%. So this is where, all strategies work. I like using that for a dollar cost averaging scenario on higher time frames at areas of value. All right, legends, let the trading gods be with you. Been flat out at work, but more time on the charts again. Awesome to hear. Good stuff. Yeah, I just like to try and give you guys just a different perception around the markets and like a full 360 view of it instead of, just going, this is bullish, 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 or whatever. I like to show you guys just different ways to look at markets so then you're more educated around scenarios. Because at the end of the day, you don't want to just have that eye to just go, yep, everything's just gonna go always keep going up forever.